I am very bullish on gold over the longer term, but I think the risk reward over the shorter term is not nearly as favorable as it is for silver. So what do I mean by that? I think over the short term here, the next couple months, few quarters, yeah, maybe there's a few $100s of upside, but downside risk also is about equal. So that's about a 1-to-1 risk reward ratio. The next thing to look for would be a higher high above 28.01. That's the recent high from back in October, 28.01. So that's a number to kind of maybe commit to memory if you're someone who's trading gold, because a break above that would be very bullish, especially on a weekly basis.
The weakness of the US dollar has fueled fresh gains for gold, with spot prices steadily approaching the highs last seen at the end of October. Gold has staged an impressive recovery, bouncing back from its December lows and appearing well-positioned to achieve new record highs. The strong upside momentum, highlighted by a high stochastic reading, suggests continued bullishness, with no signs of a reversal on the horizon. The long-term bullish trend in gold is now 26 years old and shows no sign of faltering. StevePenny underscores the significance of starting with fundamentals, which guide deciding what to buy. At the same time, technical analysis helps determine the optimal timing for buying or selling. He asserts that the current fundamental outlook for gold is the strongest it has ever been, making him more confident about gold now than at any other point in his career. Gold has surged to new highs, ending 2024 nearly 27.5% higher, despite a strengthening US dollar index, which rose over 7%, and a sharp decline in US government long bonds, which fell 8.65% during the year. A rising dollar index and increasing interest rates typically create a fundamentally bearish environment for gold. However, gold's impressive performance in 2024 highlights its remarkable underlying strength, defying traditional market dynamics. Although StevePenny remains optimistic about gold's long-term prospects, he believes the short-term risk-reward ratio is more favorable for silver. While he sees limited short-term upside for gold, he strongly advises those without gold in their portfolio to view it as a critical long-term insurance policy. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
Sure, yeah, big picture. I like to start with fundamentals, and then I like to say fundamentals tell me what to buy, and technicals tell me when to buy or when to sell. And the fundamental backdrop for gold really is as bullish as it's ever been. I'm more bullish on gold now than I've ever been from a fundamental perspective. Now, that's beginning to be reflected in the price as other people are waking up to these realities that people like you and I have been talking about for a very long time now. And, you know, a lot of people, I think maybe were overly optimistic that, you know, this new president is going to come in and, fix our fiscal and monetary situation, which I think, you know, the market is telling us that they're not buying that. Yes, this Doge committee, maybe they'll find some spending to cut, but at the end of the day, the top four expenses of the federal government consume 100% of federal tax receipts. And nobody's talking about cutting any of those things. No one's talking about cutting Social Security, Medicare, or Medicaid. Interest on the debt isn't going down anytime soon. And defense spending, those handful of things consume all of our dollars. And I think those are things that every single investor needs to wrap their mind around, that their problems have solutions, predicaments have managed outcomes. And there's really not a solution to this problem, barring some kind of like productivity miracle. So with that backdrop, I see gold, you would have thought maybe it would sell off a little bit more based on this narrative that, hey, we're going to cut all this government spending and things are going to start to improve fundamentally. Well, gold has hung in there and it has been very resilient. In fact, today as we're talking, it's just a few dollars below that previous all-time high of 2,800. So with that said, I can go ahead and share my screen if you like.
Please go ahead.
So whenever I look at charts, I like to go big to small. So this is a longer-term chart of gold, and this pattern, we've been talking about this for a long time. This goes back over 10 years. And whenever you have a pattern like this, there's two ways to get a measured move target. You can flip the big cup portion or the handle portion. And either one gives you a measured move target of either 3,000 or 2,500. Well, that's what we're saying at the end of 2023. Well, we got up to 28.01. So we've largely hit that measured move target right between 2,500 and 3,000. I am very bullish on gold over the longer term, but I think the risk reward over the shorter term is not nearly as favorable as it is for silver. So what do I mean by that? I think over the short term here, the next couple months, few quarters, yeah, maybe there's a few $100s of upside, but downside risk also is about equal. So that's about a 1-to-1 risk reward ratio. So as a trader, as someone who's looking to maybe make some money short term, I think there's better opportunities than gold. However, as someone who's looking to buy insurance as a generational insurance policy for my children and children's children, if I didn't own any gold, I would want to rectify that right now. When I look at the daily chart for gold here, this is more of a shorter term time frame. Get that dialed in for you guys, just like that. So you can see this yellow line is the 200-day moving average. Whenever you have price above a rising 200-day moving average, that's bullish. And those institutional money and those trading algorithms tend to be in a buy the dip mode whenever you're above a rising 200-day moving average. So we've seen that with price above this rising 200-day, dips are being bought. And the next thing to look for would be a higher high above 28.01. That's the recent high from back in October, 28.01. So that's a number to kind of maybe commit to memory if you're someone who's trading gold, because a break above that would be very bullish, especially on a weekly basis. Let's see if we can close above there today. So that's kind of the resistance level to watch on gold. If you're someone who's looking to buy pullbacks and, hey, I've already got a core position, I'm looking to scale in, but I want to kind of be patient, this $2,500 to $2,550 area would be a very compelling entry point to scale in a little bit, because you've got a confluence of support right here, and that's right where the 200-day moving average is. Now you might say, oh, these are just lines on a chart. Not you, but some people might think that. I used to think that. Well, the fact is that these technical patterns really do matter because the big money uses them and the institutions use them. So those are some kind of key levels to watch: 28.01 on the upside and $2,500 as support.
Silver saw substantial gains last year, driven by record-high gold prices, Chinese economic stimulus, U.S. rate cuts, and escalating geopolitical tensions. In the London spot market, silver prices reached a 12-year high of $34.80 per ounce in October and closed the year with an impressive 37% increase. Silver futures delivered an 18% return on the domestic front, marking their best annual performance since 2020. After finishing 2024 at $29 per ounce, StoneX forecasts silver prices to average $32 in 2025 and rise to $33 by year-end, representing an annual gain of 14.1%. Penny highlights that silver is unique, noting that it remains the only commodity trading below its 1980 price levels, which he finds remarkable. He believes silver has substantial upside potential, stating, "I think $50 has a magnet on it for both fundamental and technical reasons, possibly even this year." Let's shift our focus to a video.
That's typically how bull markets work in precious metals. Is gold moves first, then you get a move in the big quality gold mining stocks, Agnico Eagle, Wheaton Precious, things like that. And then the more speculative components of the precious metal sector rally last. So that would include silver and then the more speculative mining stocks. So silver, as your listeners know, is the only commodity on the planet that's trading below where it was in 1980, which is pretty remarkable. So the upside potential, I think $50 has a magnet on it for fundamental reasons and technical reasons. Quite possibly this year. I don't want to make too bold of a prediction, but I don't think that's too outlandish at all to say $50 silver. I mean, the metal traded there 40 years ago. The point is, $50 silver, I think, in the fullness of time, will eventually become major support. And I think we go much higher than that. How high? Pick your number, but I think it's a lot higher than 50. But hey, let's get to 50 first. I think a lot of us who've been in this for a long time, we'll be happy when we get to 50.
So tell us what you're seeing on the silver chart right now, then what you're keeping an eye on.
So just like gold, $2,000 was major resistance in gold for a long time. Back in 2011, we got up to almost 2,000. Then again in 2020, 2035, I believe was the number in gold. Finally punched through it last year. Well, that was like a major breakout in gold. Well, in the same way, $30 has acted as major resistance for a long time in silver. Well, we finally punched through it this past fall. And then whenever you get a major breakout like that, it's very common to come back and back test it as support. So we broke out above 30, ran up to 35. And now what this looks like to me is a breakout back test. So for me, I view anything between the $20 and $30 range as a very attractive place to accumulate or increase my dollar cost averaging. Now, because silver is so volatile, I mean, sure, it can overshoot for short periods of time. And I think 2640 here has been a very key level. I mean, you don't have to have a degree in technical analysis to be able to see this support line right here is very key. So again, if-then statements for me, if we pull back to this $20 to $30 range, to me, that's a great spot to accumulate. But 26.40, I mean, if that presents itself, for me, I'll be buying pretty aggressively down there. Not predicting that it goes there, but if-then statements. Conversely, maybe I'm not selling any physical metal at 35, but silver miners and things like that, if we run back to 35, might take a little bit off the table while holding some for a run up towards 50. Now, I'm watching interest rates because I find it very interesting right now that the Fed is lowering rates, but yields continue to rise. And I think we've all known there's going to come a day where the Fed kind of loses control of the bond market, where they go to cut rates, but the market responds in the opposite way that they intend. I'm not 100% sure we're there yet, but we're seeing some signs of that, especially with that 10-year rising while the Fed is cutting. So that's something to watch closely, because if the market loses confidence in the Fed, that could accelerate kind of the end game faster than many might think.
Gold and silver share a strong positive correlation, often mirroring each other's price movements. As historically recognized precious metals, both are influenced by similar market dynamics. In the past year, gold surged by over 27%, driven by favorable fundamentals such as escalating geopolitical tensions and speculation surrounding U.S. interest rate cuts. Do you view gold or silver as a better hedge against current global uncertainties? Why? Share your feedback in the comments below. If you found this video useful, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.